Good evening. This is the Elliott Wave Daily Update for the S&P 500 and the NASDAQ 100 for Wednesday, October the 9th, 2024. I'm going to start here on the ES, and I'm out on the daily chart. And I do have to start by saying that the two counts that I am walking around with remain both have valid points to stay active. And and it was a good question actually, was asked to me via the comment section that the efficacy of Elliott wave in terms of that it's undecisive. And while it may seem that way, and I definitely am describing it, that there are two counts and both are involving a correction, and which one is saying might be done. And that's the one I'm going to actually be working on and presenting here. And the other, which is saying that it's still within this minor four. And this is a B wave, and we're going to come down, and it's an irregular B wave. And I know that over my history here on YouTube, I have used that irregular B because it's showing up more often. But on the larger scales, and that's minor, intermediate, etc., on up, they become a little bit more aggressive in terms of that an irregular at this level suggests that that B wave is going to new all-time highs, which here in the S&P it is. We went up again today and new all-time highs in the S&P 500. And I have to tell you, low volume, not the cleanest of patterns, but let me start here on the daily, and I'm going to break it down and we're going to go through it because I am leaning, and what I'm showing now is that we're in minor wave 5. And so far, what I can see, and just to say, minor wave 4 in place here at the August lows. And then I took the box off, which was showing the support if it was a minor 4. I know it's still there, and that support is still here, and it does project to the possibility of, I think, about 5,070 something. And that all could fit. Now, here we are, daily, forums in place. Minute 1, minute 2 complete. Minute 1 of minor 5, minute 2 of minor 5. We're in minute wave 3 of minor 5. And this is where I need to start making a little bit different labeling, again, because of how we blasted off of there. So I'm going to actually come down to the hourly chart. And that's, first of all, it could be a C wave because it is impulsive. But in the direction of how it should be impulsive, it could be the beginning of that 3 of 3 move, or it can be a C wave of that B wave. And this B wave, in other words, that we're still coming down and within, still leaving this as minuet wave 1. Sorry, let me pull it down. Minuet wave 1. This, which can still be A, and then we have A, B, C, B. But it would still require that the market is going to drop and the market is going to correct in a C wave to finish this minuet wave 2. So again, I'd really not be looking for too much below these levels. I believe it still comes out at about 5,700 to 5,710 up in that area. And that's not a great deal. Yes, it's over 100 points from where we are. But it can be done quick. A lot of things could get triggered in both directions and a lot of good trading. So in any case, I'm leaving this as complete, the minuet wave 2 right now. And before, so what I've done is I've marked the C wave, 1, 2, 3, 4, 5. It's cleaner here. I still can do, that's a 5, that's a 3, and then I got, I understand how you can count it as 5, but I'm telling you, and then call it a 3. But I'm going to count that a little bit differently so that I can put the C wave there. It's still a 5. But in total, it's 1, 2, 3, 4, 5, because that inside there was another up and down. So 4, 5, 3, 4, and then a 5. So wave C, minuet wave 2. So coming up, 1, 2, 3, 4, or actually you could put 3 there, 4, and then 1, 2, 3, 4, 5 for wave 5. And again, done. So the market needs to pull back again. But again, if I'm counting it correctly, even though we're doing a series of 1, 2, and then another 1, 2 as we get ready to launch in the 3 of the 3 of the 3. So it is, and that's just Elliott, because what it is that they're building blocks, and now we're doing impulse. So we've already done minute 1 and minute 2. We're in minute wave 3, and it'll consist of 5 waves of minuet degree, of which we have 1 and 2. 2 possible, but the way this chart is being constructed, 1 and 2, and now we're in minuet wave 3. So it is also, this is subdividing on its own as well. So we have within minuet wave 3, minuet degree is the subdivision. Then a sub minuet is the second subdivision inside the third. So that is all part of the wave pattern. That is all part of when we're looking at it, and is it characteristically there? Does the personality fit? And I'll tell you, that is the personality of it. What we saw coming up here, there's a lot of that same personality. And I'll tell you what it is, but it's come up twice now. Came up in here and now in here twice. Here and then here again today. And that's the risk on trade. And I'm not sure if it has everything to do with year end, or if that's even beginning right now. Is it too early? I mean, seasonally, on the seasonal charts that I do look at, October, not that I'm going to look for a total seasonal low like I did at the beginning of the month, end of September, beginning of October. We rally, but then we pull back again. And it could be what we're going to do right now in terms of a wave 2. And if anything, if it's going to come down even further and I have to remove and come back, we're still just going to be finishing up this. And what I mean by that is like this A stays in place. A, B, C, B on this level. Sub-minuet level B. Like this, we get moved up to here. And this turns into its own ABC. And you can see it fits. So that would then suggest, like I just said, that we would come back to here in under this. And that projects down to about 5,700 to 5,710, somewhere in that area, give it about a 10 points. And it pretty much is ending up being just an irregular, but not as strong, but a slight irregular. We come down and we finish, and then we rally again. So I don't see, because, and here's the other reason, because if I look at where all the flows are, where the capital flows and the gamma flows and the just what goes along with that risk on trade, it didn't really start right from the beginning, but there was this between the Qs and the spiders, their levels have kind of changed. So the options, as they kind of pick and choose and they pin and they put things together, it's changing the location of the volatility trigger. It's changing the location, not so much of the call wall, but some of the larger gamma levels that kind of shift and they rotate back and forth. And that's all just a product of the trade or trading. But what it is doing, particularly in the Qs and in the spiders, that we're starting the day right around the volatility trigger. And if it kind of opens and we trade down below it and it triggers it, we get a little bit more of some hard selling. But then quickly the market reverses, buys it back up, re-triggers it back. It's from risk off, takes it back. So what would really kick a risk off into play is if we went through that volatility trigger and then we exceeded it by, say, 10 or 15 points, 5 or 10 points, let's say. Then you're starting to look at it as like, okay, it's been triggered, and it should then begin to build down to the downside. But that hasn't happened. So by bouncing back and forth, when it re-engages to the upside, I noticed that that's approximately when they will come in and they'll start selling the VIX. Then I know it's like, okay, somebody, for whatever the reason is, or a firm or has got it running, that they're doing a risk on trade. But I'm seeing that, to me, it's coming through like an Apple and Amazon and Broadcom and Microsoft. And believe it or not, on and off in Tesla. So, but again, is that year-end posturing? Are we already having funds and everybody else is, because they have so much to do, they're just picking and choosing, where they're going to go and try to put things together for their year end. Like I said, early, but we are in the fourth quarter. Plus, we have earnings that are starting on Friday. So let's go back over this. So right now, I'm leaving it as 1 is done, it's in place, and 2 may be done. I'm leaving it that way because I like this 5, and I'm going to call it 1 of 3. And the reason I'm doing it in that manner is because I really do believe we're going to pull back out. We need to pull back just because we did 5 from there to there. But that means maybe we come back to 57.92. All right, so let me just take it back down real quick. So yes, we're going to pull back, but the degree of the pullback, so in other words, it's like how far down we come, is going to determine where this stuff gets put. So we have to leave all those factors still in. And what I mean is that the pullback from here to here, maybe 5,800, maybe 57.85. That is no great shakes. It may seem that way because we're finishing up at 58.37. Or we're up there now. So, okay. If it's 1 step bigger, then that pullback is going to look different, and we'd be looking for 57.21 or below, down to about 5,700. All right. And again, I think a lot of it can come from just all the adjustments we're seeing in the options, and the gamma levels are changing. So we're getting the posture, we're getting the different things. And let's just see what happens. Moving averages. And we'll go out to the daily for those because I like to look at it on the daily. And again, a strong bullish bar with new all-time highs. So follow through, yeah, I think I would expect some follow through. But first, we pull back. All right, let's go over and take a look at the NASDAQ. All right, same kind of deal in the NASDAQ. I've got it here on the daily so we can take a look. Wave 4 is in place, took the box off. So we're in 1, 2, 1, 2, and then another 1, 2, and then another. So this is subdividing a little bit more, but I may go over and change that. So let's see if I can't equal it to. No, it's just kind of the way it's kind of fallen out into here. So, and what I've got done is, yes, here's what I have left in place. Here, I'm leaving the little bit larger correction in place. So in other words, it's like minuet wave 1 complete, right? And then this is A, and this is A, B, C, and the B. See the color? So the subminuet there stays in place. What I have above it in the parentheses is the opposite. Not the opposite, but what's in line with the S&P. That minuet wave 2 complete. And that would be at the October 1st low. And then we come up, and it's not the prettiest, but it does fit and it works into subminuet wave 1, subminuet wave 2, and then sub wave 1. So we're in the third, and we're in the third, and we're getting ready to finish this wave 2 and then move stronger in that third. Now, upside here, I should have done this in the S&P, but I didn't. The minor 5 projects to 2113 And we need to stay above, we need to get above 21,213. This is 21,001. So I know we need to get above that. And so it puts us up into here, 21,007. That would be minor 5 and the possibility of also bringing in the intermediate degree. The third, minor 5 to complete intermediate wave 3, and that sets us up for a much larger pullback. Now, when that, I believe, will take the push, the finishing of minor 5, I believe it takes us to year end, at least, if not to start even the new year. But I think pretty much at the beginning of the year has been the habit of the market lately, over the last several years, is we tend to top on the first day of the new year, and then we just work our way lower. And I'm kind of thinking that's kind of how it went in 2022. We topped on the first day, and the NASDAQ actually topped in the November before. So we'll wait and see. But these measurements are for the minor wave 5. And as I said before, I think at least 22,000 to 23,000 personally. And the size of these waves now, right? Looking for the third. The third would be 100% of wave 1, which would, I want a little bit more at 21,243. I'm thinking it needs to be more than 100%. Doesn't be a whole lot more at this stage, but more. And then here we have minuet wave 1 of this minute wave 3. And this one I can add now. That's for the pullback of wave 1, which we've already got done. So I'm going to remove that. And what I am going to put in is a very early type, what we use to get just a gauge on wave 2. And so I always think I've already got this done, and then I go back and relive it and go like, oops, I didn't. So 1168268, and that's going to be in this one, please. And this is for a third, so I don't really want to go that far out just yet. Okay, so what happened to them? Oh, the third is 21,786. That works. We get the 3 above that 3, and that clears us to keep us in that minor 5. So the minuet, there we do a 4, and then we do a 5, and that completes the minute, and this one would have to be raised up. Let me just stick the next level in for here. 1618 is pretty high up, so I'm also going to include 382. Not that I necessarily would look at it in this respect, but I think that that's what it should. Oh, it's the minute. It may come in between. All right, so I have 100% at 21,243, and that is for the minute. Then I go up to another level for minute 3, 22,265. That works all the way up to 22,896. That works. It does put the pressure back on, but then again, that's only 3, and then we can have a short 4 and we have a 5 and not get all that far because it's just too toppy. I mean, this will be new all time for all the indexes. And yeah, we will see. I think there can be some decent play, but don't forget, market's got to get thin up here because we're in areas where it's like, well, better have a better reason to sell because there's nothing really to say, well, this is resistance. Fibonacci wise, we can figure out resistance, but beyond that, I can't say, well, that's a price resistance, or that held back here, or that's related to another chart move, because they don't exist. All right, now for tomorrow, we have on our agenda for economic data, initial jobless claims, consumer price index, both at 8:30 a.m. And then the balance of the days are going to be filled once again with Federal Reserve personnel. Governors and presidents will be out talking tomorrow, and undoubtedly because the consumer price index, which is projected to come in less, to actually decline. We'll see. We'll definitely see. I don't need to leave a big box here. All right. So as far as the chart goes, it is bizarre. I will grant you that. But, and like I said, 2 days, this one was more intense than this one, but I believe that's all part of today. So risk on trade, at least in NASDAQ stocks, or in AI stocks, I should say. All right, next update, Thursday, October the 10th.